What if I told you that the single most critical piece of information you need before you even think about exchanging your Iraqi Dinar isn't about a rate, isn't about a date, and isn't about a political announcement from Baghdad? It's about a policy hidden in plain sight, a policy that could single-handedly determine whether you become a millionaire or are left holding a currency you can't convert. A policy that your average guru won't dare to explain in detail because they don't understand the mechanics of international banking compliance. That policy is the Chase Bank IQD exchange limit, and today we are going to do a deep dive, a step-by-step breakdown that will fundamentally change your understanding of what a revaluation will actually look like from a practical banking perspective. Forget the speculation for the next 20 minutes. We are dealing in cold, hard facts about how one of America's largest financial institutions will handle this event. Because without this knowledge, you are essentially flying blind. The entire Dinar community has been focused on the if and the when, but almost no one is talking about the O. How will you actually get your money? How much can you get at once? What are the invisible barriers that the bank itself will put in place? This is not just another news update. This is an operational manual for the most important financial transaction of your life. Let's start with the foundation. Why does Chase Bank, or any bank for that matter, have limits on currency exchanges in the first place? This is the crucial context that most people miss, and it completely reframes the entire conversation. Banks are not currency exchanges on a street corner. They are heavily regulated entities operating under a microscope of federal and international law. The primary reason for any exchange limit boils down to two things: risk management and regulatory compliance. On the risk side, a bank like Chase is taking on a significant liability when it agrees to hold a large amount of a foreign currency, especially one that is considered exotic or volatile like the Iraqi Dinar. They have to hedge their own exposure, and allowing unlimited, massive exchanges of such a currency would create an untenable financial risk for them. More importantly, however, are the regulatory compliance rules, specifically anti-money laundering's AML and Know Your Customer (KYC) laws. These laws, enforced by agencies like FinCEN in the United States, require banks to monitor and report suspicious financial activity. A sudden, massive inflow of a previously illiquid currency like the dinar would trigger every single alarm bell within their compliance department. The limits are therefore a control mechanism, a first line of defense that allows the bank to process transactions in a managed, orderly fashion while performing the necessary due diligence to ensure they are not facilitating money laundering or other illicit activities. This is not a conspiracy to hold you back. This is the reality of modern global finance. Understanding this is step one because it means that any discussion of Chase's IQD limit is not about a random, arbitrary number chosen to frustrate investors. It is a calculated position based on their internal risk assessments and their legal obligations to the U.S. government. This also implies that these limits are not static. They are dynamic and can change based on the bank's assessment of the currency's stability and liquidity. If the IQD were to revalue, the initial limit would be set at a very conservative level precisely because the bank would be navigating uncharted territory, dealing with a currency that has just undergone a monumental shift. They would be moving cautiously, incrementally increasing limits as their confidence in the new currency's market and their own ability to manage the associated risks grows. This process is not instantaneous, and it is this period, the immediate post-revaluation phase, that is the most critical for you as an investor. Your ability to access your funds will be directly tied to the bank's evolving comfort level, which is why knowing the starting point is so absolutely vital. This foundational knowledge separates the prepared from the panicked. Now let's get into the specifics of what we understand about Chase Bank's current and projected stance, keeping in mind that all of this is based on their existing frameworks for similar situations and not on any inside information, as no bank will publicly announce its plans for a hypothetical event. Based on Chase's historical handling of other exotic currencies and their current published policies, we can construct a plausible, step-by-step model of how an IQD exchange would unfold. First, the initial limit. It is highly probable that immediately following any official revaluation announcement, Chase, along with other major banks, would impose a very low daily exchange limit for IQD to USD. We are not talking about millions or even hundreds of thousands. A realistic starting point, based on their policies for other volatile currencies, could be as low as a few $1,000s worth of IQD per day per account. This might sound shockingly low, and it is. Remember the context of risk management we just discussed. This initial cap is their way of testing the waters, of controlling the flow, and ensuring their systems are not overwhelmed. The second step involves the mandatory structuring of the transaction. You will not be able to walk into a branch with a briefcase of dinars and walk out with a suitcase of dollars. The process will be electronic and account-based. You would likely need to have the IQD held in a specific foreign currency account, and the exchange would be processed as a wire transfer or a currency conversion within your own account portfolio. The funds would then be available in your primary checking or savings account. The third and most critical step for larger holders is the escalation process. What happens if you have a quantity of dinar that far exceeds the daily limit? This is where the real banking relationship and your preparation come into play. You would need to contact the bank's premier banking or wealth management division to initiate a structured exchange process. This is not a simple transaction. It becomes a private banking event. Bank will require extensive documentation to satisfy their KYC and AML requirements. This means you will need to provide a clear, documented paper trail for the acquisition of your dinar. Where did you buy it? When did you buy it? Can you prove the source of funds used to purchase it? This is the moment of truth for which many investors are completely unprepared. Without a clean, verifiable history for your currency, you could face immense difficulties, delays, or even have the transaction flagged and frozen. The bank will not simply take your word for it. They have a legal obligation to investigate large, unusual transactions. The entire process for a large-scale exchange could take weeks or even months, involving multiple departments and senior compliance officers. The idea of a sudden overnight windfall accessible immediately is a fantasy. The reality is a meticulous, structured, and heavily documented financial process. Your goal should be to understand this pipeline from start to finish, to have your documentation in perfect order, and to manage your expectations accordingly. The bank is not your enemy in this process, but it is also not your friend. It is a regulated intermediary following a strict protocol, and you must be prepared to navigate that protocol successfully. So, where does this leave you, the investor, today, before any of this has happened? In a position of immense power, provided you take the correct, proactive steps right now. The time to prepare for a bank exchange is not after the revaluation announcement. It will be far too late. The chaos, the volume of inquiries, and the sheer panic will make it nearly impossible to get clear answers or personalized service. The preparation begins today, this very moment. Your first and most non-negotiable task is to get your documentation in order. Locate every single receipt, every certificate of authenticity, every bank wire confirmation, every record of purchase for the dinar you hold. Organize them chronologically, make digital copies, and store them securely. If you have gaps in your documentation, now is the time to try and fill them. This paper trail is your golden ticket. It is the key that will unlock your access to the funds. Your second task is to build a relationship with your bank. If you are a Chase customer, do not walk in and ask hypothetical questions about the dinar. Instead, schedule an appointment with a branch manager or a private client advisor. Have a general discussion about their policies for exchanging foreign currencies, specifically exotic currencies. Ask about their daily limits for other currencies. Inquire about the process for structuring a large, complex international wire or currency conversion. Frame it as a general inquiry about their international services. This does two things. It gives you valuable intelligence about their current operating procedures, and it begins to establish you as a serious client who is thinking about sophisticated financial transactions. Your third task is mental preparation. Internalize the step-by-step process we have outlined. Understand that there will be limits. Understand that there will be paperwork. Understand that it will take time. By doing this, you are immunizing yourself against the panic and misinformation that will inevitably flood the community when an announcement happens. You will be the calm, prepared individual who knows exactly what to do, while others are scrambling in confusion. You have the information, the power is now in your hands to use it. This is not just about waiting for an event, it is about actively preparing for its consequences. The revaluation is the starting pistol. The race to successfully and legally convert your currency is a marathon of preparation that you must run today. If this deep dive into the mechanics of Chase Bank's policies has been an eye-opener for you, if it has fundamentally shifted your understanding of what comes after evaluation, then you cannot afford to miss what we have for you next. The banking process is only one piece of the puzzle. Click the subscribe button and hit that notification bell right now, because in our next video, we are going to break down the single most important document you need to have in your possession to satisfy bank compliance officers. A document that most investors don't even know exists. We will show you exactly how to obtain it, how to verify it, and how to use it to fast track your exchange process, potentially saving you weeks of delays and headaches. That video is coming very soon, and you will not want to miss it. Stay informed, stay prepared, and we will see you in the next one.